Hi, welcome to my channel. Today I want to share with you my updated valuation of Apple. I have uploaded a video back in May 2021 of Apple where I discussed the qualitative attributes of the company and also the quantitative discussion, which is the projections and the fair value. Today I'm going to focus on updating that quantitative analysis, meaning the fair value. All the qualitative attributes of the company still stand, in my view. The quality of this company is great. If you want to check my analysis on the qualitative attributes of the company, you can go and check that video. I'm going to leave a link here below in the description and also up here of that video. But today we'll focus mainly on updating all the information we received in September on the fiscal year 2021, and also on in December for the first quarter of fiscal year 2022. So that the two reports were really strong in terms of revenue and also in terms of margins. The whole ecosystem of Apple is working perfectly. The hardware and the services with the App Store and all that working to benefit into each other. You know, it's the famous network effect that I like a lot in companies, when one benefits the other and produces more demand for the other one, and then vice versa. So this is great. So if you see, for example, in the income statement for the first quarter, products and services both came with very high growth, and the company overall 11.2%. This was more than what I was expecting. Gross margin was also better than the previous quarter in both areas, in products and services, and overall as well. The operating expenses were similar. So that means that the operating income and the margin, or the operating margin, was 33% versus 30% in the previous quarter. So also very good. They bought back shares, roughly 3.5% of the outstanding shares in the last year. So everything looks good here on a quarterly basis, as you see. If we go a little bit more deeply in the revenues and we go into the categories and the segments, you see that also iPhone was very strong, Mac really strong, the iPad was weak, then wearables, home and accessories also quite good, and services, as it's been showing in the past, tremendous growth. And across all regions was quite strong, except in Japan. And here the reason was mainly iPods and iPhones sales, but also it was a forex pressure, you know, the yen being a little bit weaker versus the dollar. If we go to the balance sheet, it's also great. In the first quarter, you see 63 billion in cash and marketable securities, and 122 billion in debt. So versus the EBITDA that they are producing, this is very good financial position. Then let me show you the annual revenues now. And here is the historical for the last 10 years. And I show you here what's happened in the last year from 2021 versus 2020. And you see the tremendous growth across all the categories. And the total was 33% growth. This is amazing growth in the last year. If you check here my previous assumption of projections from September 21 all the way to September 30, and see what I was assuming in my model before versus what they have actually achieved, and this is what happened for the iPhone. I was expecting to have 190 something back in September 2027. And the same here for the Mac and for the iPad, for wearables and for services. So these years is where I was expecting the company to hit what they already achieved in September 2021. So this was quite conservative. And here we have the services as well, and overall. So of course I'm going to update my model based on these numbers, which is going to have a positive impact on the valuation. So this is my projections. So what I'm doing, you see the compounded annual growth rate I was using in the previous model, it's not going to change. I'm going to keep the same growth, but because now I'm going to use these actuals, the numbers are going to be much larger. And you see, for example, the revenue I was assuming before for 2030 was $500 billion, and now it's going to be 677 for the new projection. And if you see on a compounded annual growth rate, what I am assuming is much smaller than what they have been achieving in the last 10 years. So 9.9% overall, and I'm going to assume 7.2 overall. So now let's go to margins, and the same thing here in terms of gross margin for products and for services, and then the operating margin. So this is what they have been achieving, and this is what I'm going to assume. Now let's check what I was assuming before in terms of margins, and let's see the changes I've made. The main changes here in products gross margin. Before I was assuming 31% going all the way to 27%, decreasing really, because I saw that the company had been decreasing in the past few years, but now they came with a 35% gross margin for September 2021. So they have reverted this decrease that they had before. So what I'm going to do is I'm going to assume that this 32% instead of 31 goes to 35, which is what they have achieved in September this year. Services gross margin is going to be similar than before, I mean exactly the same. And then this research and development and general sales and administrative is going to be very similar. I changed 6 here instead of 7. And so that gives me this income statement. So here we have the historical, and this is the projections, and you can see the operating margin I'm using and the gross margin, the one I showed you before. And this is the EBITDA I'm getting, 273 or 274 billion. And in the cash flow statement, I am not changing much either. So this is the historical, and this is the projections. And this number here is free cash flow to EBITDA. I want to make sure that the future that I am projecting in terms of the relationship between free cash flow and EBITDA is similar to the one that we have had in the past. So that takes us to the fair value and IRR. I'm using EBITDA and free cash flow for September 2031 that I showed you a minute ago for both of these figures. Same ratio as before. That gives me the enterprise value, less debt gives me the market cap for each of these two calculations. With the weighted average stocks outstanding I'm using for 2031, I get this price. And then I average these two, and this is going to be my target price for 2031. Which, if I were to sell the company on 2031 at this price and buy the company at 170, which was the price as of March of 2022, and then this free cash flow per share adjusted that I'm going to receive, this cash flow as an investor gives me this IRR. So if I buy that at 170, I'll get 10% roughly of IRR. And then if I buy it a bit more expensive, I'll of course going to come down a little bit in return. And if I go, let's say, to 136, I'll get almost 13%. So in essence, what this shows is that the company at this price, 170, is fairly valued in my view. So before the previous video I uploaded, the company was a little bit overvalued. This is a company that has always been there in the margin of a bit too overvalued, I have bought this company for my portfolio some years ago, but then I sold it. I made a mistake of selling it, and I have learned with this stock and with other stocks that when you buy a good stock at a good price, you never sell it. You never sell it for the reason of the price itself. You sell it if things go wrong, or if your whole, let's say, analysis is wrong. But I think that it's a big mistake to sell a company that really creating value, that all the attributes that you thought of the company are still valid, and then because the price goes a little bit over your valuation, you sell it, and that was a big mistake I made. But in any case, it's now fairly valued. It's a company that, as I said, it's if you buy a company at a relatively good price, I mean fair value, you don't need to buy it dramatically cheap to make money with a company like this. So probably it's time for me to invest again in this company. Who knows? But that's it. That's my take at the valuation of Apple. If you like this type of video, please give it a like to the video, and don't forget to subscribe to the channel. If you want to get notifications, also press the bell. And thanks very much for watching. I'll see you soon for another valuation video. Bye bye.